Hare Krishna. Welcome to Tax Guru YouTube channel. This is C. Rohanar Pingale, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Mars Network. So today we are going to discuss special topic on overview of international taxation under Income Tax Act 2025. So let's dive into it. Let me allow to share my screen. Yes. So let's start with it. So this area deals with taxation of cross-border transactions and non-resident entities. The key pillars remain source versus resident taxation, relief under double tax avoidance agreements, that is DTAA, transfer pricing, general anti-avoidance rules, that is GAAR, and place of effective management, that is POEM. So the new Income Tax Act 2025 has recognized these provisions for better reliability without making any major policy changes. Please note down that without making any major policy changes under the new Income Tax Act. So old scatter sections have been grouped logically with a clearer definition and tables. So the Act continues to align with the global standards like BEPS while protecting India's taxing rights. So we will cover the important aspects in the remaining slides. Let's see key structural changes, old versus new Act. So the new Act has significantly reduced complexity by consolidating the international taxation provisions. Earlier, one had to refer to many scatter sections, right? So now they are logically grouped with the supporting schedules. For example, the definition of the international transaction is now under Section 163 of the Income Tax Act 2025 with an explicit list covering the tangible and intangible property, services, financing arrangements, and business restructuring. So this reduces what? Ambiguity. Transfer pricing provisions are mapped to the new sections 161 to 177. DTAA relief is under sections 159, 160, and GAAR is under section 178 to 184. So the framework remains strong, but is now much more reader friendly. Let's understand residential status and scope of taxation. So here, the rules for determining the residential status remain largely unchanged. So an Indian company or a foreign company whose place of effective management is in India is treated as a resident and taxed on a global income. But the Indian company is always a resident. So non-residents are taxed only on an income sourced in India. Indian company or a resident company taxed on a global income, but non-residents taxed only on a income sourced in India. So the new act has used cleaner language and the tax year concept, right, to make the references simpler. So deemed accrued provisions have also been streamlined. In practice, proper documentation of the decision-making process is still the critical for foreign companies to defend their non-resident status as POEM cases, as in POEM cases, that is place of effective management cases. Let's see double tax avoidance agreements, that is DTAA. So relief under DTAA is now available under the new section, that is 159, 160. The beneficial provision of the treaty continue to override the domestic law where there are more favorable. That is the same. Nothing has been changed over that. The impact of the multilateral instrument MLI is fully preserved. So tax residency certificate and Form 10F requirements remains the same. So new act has what? Clearer language regarding the most favored nation claims and notification requirements. So all existing treaty benefits are protected under the saving provisions under the new Income Tax Act 2025. So in practice, always compare the domestic rate with the treaty rate. For example, royalty and FTAs are often taxed at what? 10% under many treaties versus higher domestic rates, and maintain the proper documentation. Let's see transfer pricing framework. Here, the arm's length principle continues to be the foundation of the transfer pricing. Of course, it is, and it is not any change over there. So the definition of the international transaction has been only expanded and clarified under Section 163 with an explicit list that includes intangibles, business restructuring, and deemed transaction. So this reduces what ambiguity and that ambiguity that existed earlier. So the associated enterprises stage has been refined, not redefined. Okay. So documentation requirements like master file, local file, and country by country report, that is CBC, and advanced pricing agreement APA provisions continued with a minor clarifications. For that, you need to go through it, the provisions. So in practice, maintain a robust transfer pricing study every year. So the tolerance range for LLP now applies clearly even to the single transaction. That is a welcome change. Moving further, let's see transfer pricing compliance and the procedures. So here the transfer pricing officer's powers are now under section 166 of the new Income Tax Act 2025 and remains the same. So the three-tier documentation requirements continues unchanged as I discussed in earlier slide. APA timelines have been clarified for better certainty. Some block assessment concepts have been introduced in TP proceedings to improve what efficiency. So faceless transfer pricing proceedings have been enabled under a central scheme. That is also a welcome change. In practice, file form 3CB on a time and align the Indian TP policy with the global master file. Many MNCs are using what APAs to avoid prolonged disputes. Consider this option for your clients with a significant international transactions. Let's understand place of effective management and GAAR. So the poem test for determining whether a foreign country is a resident in India remains unchanged. Nothing has been changed on that ground. If a key management and commercial decisions are taken in India, the company can be treated as a resident and taxed on its global income. GAAR provisions are now under section 178 to 184. Impermissible avoidance arrangements lacking the commercial substance continue to attract what higher tax rate. So grandfathering protection for investments made before April 1st April 2017 is preserved. The new act has what used simpler language for the main purpose and commercial substance test. So in practice, maintain the proper board minutes, decision making records to define your OM, that is place of effective management cases, and evaluate the arrangements under the GAAR rules. Let's see withholding tax on payments to non-residents. So withholding tax payments to the non-residents is now consolidated under section 392 to 394. Okay. And presented in a what tabular format, making it much easier to refer. So you can apply the lower rate available under the DTAA if it is beneficial, provided you obtain a valid tax resident certificate, same as in earlier law. So Form 15CA and 15CB have been mapped to now new forms 145 and 146. Many of you also from April now have already started or filing the forms 145 and 146 because now 15CA and 15CB are not available for the tax year 26-27. That the process for obtaining lower or nil withholding certificate has been what streamlined. So in practice, always check the treaty rate versus your domestic rate before making any remittances. So common mistake is forgetting to claim the treaty benefits. So always verify and document the beneficial ownership. Let's see practical takeaways and transition issues. So for this, all update all your templates with a new section numbers like for transfer pricing 161 to 177 DTAA, that is 159 to 160. Then maintain mapping sheet for old versus new during 2026 transition. Then advise your MNC clients on enhanced TP documentation and POEM or GAAR compliance. Leverage expanded safe harbor and APA for certainty, and use portal mapping utility for smooth shift. That is very important. We need to need to access our income tax portal for this mapping utility. Very, very much, very important and very easy to understand. So that's it from today. Thank you. Thank you so much for patient hearing. If you have any questions, observations, suggestions, then do let me know via WhatsApp, email, or you can also comment below the video. If you are not yet subscribed Tax YouTube channel, then do subscribe for it for latest updates and video series like this. Hope you are gaining valuable knowledge from all these updates and video series which we are conducting on a Tax YouTube channel. So stay tuned to the Tax YouTube channel. Thank you. Thank you so much once again. Bye bye. Take care. See you soon. Hare Krishna.